we now have even more information out that the changing propaganda index, or CPI as I'm calling it, is totally divorced from reality. This time it is rents. So I've talked about food prices, and food prices are much, much higher than the consumer price index ever shows. But most people don't know this. 25% of the core weighting for the consumer price index is based on rent. However, it is not based on the reality that Americans pay in major metro areas and cities for rent. It is based on a fictional formula that PhD economists at the Bureau of Labor Statistics and elsewhere came up with called owner's equivalent rents. So while US home prices soar and the Fed subsidizes mortgages, so Americans keep buying more and more homes, second homes, demand and the price for people buying vacation homes and second homes is also soaring. And we just got data points out this week that rents now are up 17% year over year. So this is an enormous increase. The consumer price index, which uses owner's equivalent rent is only showing a 2.4% increase over the last year in rents. Now, that is an absolutely enormous difference versus this data point that we just saw about the actual increase in rents that landlords are charging on average in many major metro areas. Some places it's more than 17%, other places it's less than 17%. That's the average. Just like how home prices in the last 12 months are up 24% on average, according to the National Realtors Association and elsewhere. So you have home prices up enormously in the last 12 to 18 months on average in the US in many areas. The average number is 24%. You have rents on average in the US up enormously, but owner's equivalent rent, which only shows a 2.4% increase and is given an enormous 25% weighting in the core consumer price index, or CPI as I call it, or changing propaganda index, that is wrong versus reality by 7x to 10x. Whether you're measuring that versus the average increase in rents, what the landlords are now jacking up the prices and charging, so that's mean reversion, because we all knew that rents were eventually going to go up. They weren't going to stay low for super long periods of time, especially when many local governments are already talking about raising property taxes again, or they've already raised property taxes and will probably raise them again in the not too distant future. And then if you measure the owner's equivalent rent, the fake owner's equivalent rent of 2.4% increase versus the 24% rise in US home prices, that's wrong by 10x. So this is how divorced from reality the consumer price index is, or changing propaganda index. Now, why would it be this wrong? It is in the incentive of governments and central banks, especially here in the US, to drastically underreport the real inflation rate. There are many reasons for this, but one of the biggest reasons is cost of living adjustments. And if the government was a lot more honest about the real inflation rate and this 5.4% inflation rate that's being talked about now, the government's going to come up with new ways with base effects and others in the coming months to reduce that down to 4%, 3%. It'll probably be back down to 3% in the next couple months. I'm sure they'll figure out new ways to adjust or change the formulas with substitution, hedonics, geometric weighting, chain CPI. They can take things and move them out. They don't even have to disclose this publicly. And that's what's going to happen. Otherwise, if the government was honest about the actual real inflation rate, because of cost of living adjustments, they would have to pay out enormously more in Social Security payments or retirement benefits to government employees. Although recently there was a big increase in food stamp and EBT payments. I'll talk about that in another video. Finally, if you like content like this and want to help keep content like this free so it doesn't all end up behind a paywall, or you want far more in-depth content, research, financial education, and analysis than I provide in these short little free videos, there is 25 new articles out for patrons in the last 10 or so weeks on a lot of interesting topics about global macro companies and sectors, about gold mining, silver mining, a precious metal royalty and streaming company that just hiked their dividend by 50%. So even if wages go up or oil prices go up, This company is very, very sound. They're extremely profitable, making an enormous amount of free cash flow each month. And there is now over 180 articles behind the paywall for patrons for only $5 a month, the cost of a Starbucks cup of coffee. It is one of the best deals out there. I charge less than anyone else for premium content. If you don't like it, you can always cancel. Although, if you do try it, I think you're really, really going to like it. The value behind the paywall will far exceed the cost of a cup of coffee. So if I could wrap up this short little video in about a minute, we're getting more evidence here, and more people on Wall Street and more Americans are finally starting to wake up. I even noticed it in one of the Bloomberg articles talking about how divorced from reality the owner's equivalent rent number of 2.4% was versus the rent hike of 17% that's being quoted versus the 24% rise in home prices. But the difference is you have all these talking heads in the mainstream financial media and on Wall Street and PhD economists, because they're all making money off the status quo. They're all trying to find ways to explain the big, big difference of the owner's equivalent rent of 2.4% increase versus reality. But the reality is the truth, not the owner's equivalent rent. The owner's equivalent rent is fake. It is a fraud, and it will always underreport the reality of Americans who are trying to buy a home or trying to pay rent to survive.